In this lesson, I'm going to start bringing everything I have taught you about price action, from candlestick analysis to trends and to support and resistance, together into a high probability trading strategy. So far, I've discussed the three core components of price action: candlestick analysis, trends, and support resistance. So how do we bring these together into a solid trading strategy? And more importantly, what is the logic behind every step of this strategy? Because you need to know each and every step in detail in order to trade the strategy well. If you do not fully understand everything, you will make mistakes. The more mistakes you make, the lower your win rate, the lower your profit, and the lower your confidence goes. So pay really close attention and think about the story of bulls and bears. And more important than that, more important than anything else, ask yourself that question I told you about at the start of the course. You know the question I'm talking about, right? The most important question in Forex? Who's in control of price? If you did not remember that, then stop right here and start this course again. That question is more important than anything else in Forex. You need to ask yourself that question every single time you look at a chart. So let's start at the beginning. Almost everything in Forex starts with a trend. The trend is your friend, right? Well, no, that's not really true. Actually, I hate that saying. The trend is not your friend, but it's important. The trend is important. Why? Because when you look at a trend and you ask yourself who is in control of price, the answer is obvious and indisputable. Look at this bullish trend here. Who's in control of price? Buyers, obviously. You cannot look at this logically and say anything else. As of this moment in time, when you're looking at this trend, buyers are in control of price. Sellers cannot be in control because you're seeing higher highs, higher lows, and you're seeing strong bullish bodies. But now we have resistance up here. So what's going to happen when price approaches resistance? The trend looks like it's stalling. What is the story of price here? We have gone from a buyer-controlled market as price was in a bullish trend. Then price hit this area of resistance and stalled. A new candle formed with a long upper wick and a small body, and a small lower wick. So who's in control of price here? Well, price is undecided. Buyers are no longer in control, but neither are sellers. So let's break down what we have so far. We have this nice little bullish trend. It consists of 6 candles. It is a strong and concentrated move by buyers. You know how to identify a trend. We have this trend hitting an area of resistance. If you remember the lessons on support and resistance, resistance is a sell area. It is an area in which sellers are grouped. So when buyers run into sellers, what happens? They fall into a struggle. Buyers can no longer move up, but sellers are not yet strong enough to counter buyers. So we get indecision forming on top of this resistance area. So again, who is in control of price? It is undecided. Buyers are no longer in control, but sellers are not in control either. From here, price can do anything. It can continue up, it can move sideways for a week, or sellers can take control and price could start falling down. So if sellers take control and they drop price low enough, then you have the start of a counter trend reversal setup, which is one of the high probability setups I trade. If you enter your trade here, place your stop here, and your target here, that would be a reversal trade. I'm going to discuss targets, entries, and stops in detail later. Right now, I want you to just understand the steps behind this trade setup. We have a trend, which I call a preceding trend because it comes before indecision. It's preceding indecision. We have resistance, and then we have the indecision sitting on top of the resistance, and then we have the reversal. Altogether, this tells a story, and that story is buyers had strong control of price heading into resistance. When price hit resistance, buyers started to lose control of price. We saw a strong indecision candle forming, which told us sellers were fighting for control. For a 24-hour period, because this is a daily chart, for a 24-hour period in which this candle formed, there was a tight struggle between buyers and sellers. Then, in the next candle, sellers gained control of price and they started to move down. They soon broke the low of the previous candle and created a lower low. This indicated that sellers were quite strong. Because they created the lower low, it indicated that they were quite strong, and they were. because they continued to push price down well beyond the low of the indecision candle. The next candle opened and also moved down. That is the story of price for this counter trend reversal trade, and this works the same for a long reversal. So in this example, we see the opposite. Sellers had strong control of price leading down into support. When sellers hit support, also known as a buy area, buyers fought back. An indecision candle formed with a long lower wick and a medium upper wick formed. In the next candle, buyers took control of price and created a higher high. That higher high indicates that buyers are strong. The following candle continued to push up, and this would have been another successful reversal trade, although it would have been a long reversal trade. And that is a counter trend reversal. Now, I know that sounds scary, counter trend. Traders are told that they should follow the trend and never trade against the trend, but it's just not true. When you think about it, it's also not logical. Tell me, have you ever seen a trend that goes straight up for weeks without ever stopping or slowing? Because that's not how trends work. Trends work like this. Price goes up, slows down, turns back and reverses, then it continues back up again, so on and so forth. I like to profit from those reversals, those counter trend reversals, because I know 100% for sure that when price is trending, it won't move in the same direction without stopping. At points it will stall and it will reverse, and then it will resume its original trend. On this chart, when it was moving up, I knew with 100% certainty that at some point buyers would stall and pull back a little. I know that because it's the nature of a trend. A bullish trend never goes straight up forever. Now, if I know that buyers are going to stall and reverse, and I've marked out a strong sell area on my chart, all these resistance areas here, and I see that when price hits this resistance area, this indecision forming, well, that's a high probability trade setup, and it would be pretty dumb not to take it. In the coming videos, I'll show you exactly how to enter counter trend reversals and how to pick the strongest counter trend reversal. But first, let's look at another high probability trade setup that I use.